There's a moment that most people don't talk about, a moment that happens in complete silence with no fanfare, no confetti, nobody clapping for you. It's the day you make that final car payment. And I want to tell you, that moment changes far more than just your bank account. It changes the way money moves through your entire life. And almost nobody prepares you for just how much shifts once that payment disappears for good. Let's start with the obvious part, the part everyone already understands. That monthly payment, whether it was $300, $500, or even more, just vanishes from your budget completely. Gone. And I know that sounds simple, but think about what that actually means in practice. That's money you have been sending out automatically every single month for years without even thinking about it anymore. It became background noise. It became just another line item you stopped noticing. And suddenly, one day, it's not there anymore, and you have to consciously decide what happens to it now. Here's where most people get this completely wrong, and I mean completely wrong. The moment that payment stops, there is this incredible temptation to just let that money quietly get absorbed back into your regular spending. You don't even do it on purpose. You just stop being as careful, you eat out a little more, you upgrade a few things here and there, and within 2 or 3 months, that freed up money has just evaporated into your everyday lifestyle without you ever making a real decision about where it should go. This is called lifestyle creep, and it is one of the sneakiest ways people stay financially stuck their entire lives, even after doing something as responsible as paying off a car loan. But here's the other path, the one that actually changes your financial trajectory. If you take that exact same payment, the one your budget was already used to living without, and you redirect it somewhere intentional, that is where everything starts to shift. Let's use real numbers so this actually means something to you. Say your car payment was $400 a month. If you took that $400 and put it into an index fund earning an average of 8% a year, in 10 years, that becomes roughly $73,000. Not because you did anything heroic or complicated, just because you kept paying yourself the exact same bill you were already used to paying. Except now, it's building wealth instead of buying a depreciating vehicle. That's the real secret behind paying off a car loan. It's not really about the car at all. It's about what happens to that monthly cash flow the moment it's freed up. The car payment disappearing is just the trigger. What you do in the weeks right after is what actually determines whether this becomes a turning point in your finances or just a temporary feeling of relief that fades away. Now let's talk about something people rarely mention, which is the mental shift that happens once that loan is gone. When you have a car payment, there's this subtle background stress that most people don't even realize they're carrying. Every month, there's an obligation, a bill with your name on it that has to get paid no matter what else is going on in your life. Once that's gone, something genuinely relaxes in how you think about money. You start to feel like you actually have breathing room, like your income is finally yours instead of already being spoken for before it even arrives. That feeling alone changes how people make other financial decisions, often for the better, because they're not operating from a place of constant obligation anymore. There's also a ripple effect on your credit and your overall financial profile that's worth understanding. Your debt-to-income ratio improves the moment that loan disappears, which matters a lot if you're planning to apply for a mortgage or any other kind of loan in the near future. Lenders look at how much of your income is already committed to existing debt. And removing a car payment can meaningfully improve what you qualify for, sometimes even affecting the interest rate you're offered on future loans. So paying off that car doesn't just help you today, it can quietly improve your financial options for years down the road. Let's talk about insurance too, because this is something people almost never connect to the car loan itself. When you finance a car, the lender typically requires you to carry full coverage insurance, which includes collision and comprehensive coverage on top of your basic liability. Once that loan is paid off, you actually have the freedom to reevaluate your coverage. Depending on the age and value of your car, dropping down to just liability coverage, or adjusting your deductibles. Could save you a meaningful amount every single month. That's another chunk of money that quietly frees up on top of the payment itself that most people never even think to look at. Now here's where I want to challenge you a little bit, because paying off the loan is genuinely the easy part. The hard part, the part that actually separates people who build wealth from people who stay stuck in the same cycle, is what happens next. A lot of people pay off their car, and within a year or two, they're right back into another auto loan, buying a newer model, restarting the entire payment cycle from scratch. And when that happens, all of that freed up cash flow. All of that breathing room you just earned gets swallowed right back up into another monthly obligation. The car changes, the stress level goes right back to where it was, and financially, you're standing in the exact same spot you were in before, except now you're driving a shinier car. So the real question isn't whether you should pay off your car loan. Obviously you should, and if you're working toward that right now, that's a great move. The real question is what you're going to do the day after that final payment clears. Are you going to let that money quietly blend back into your lifestyle without a second thought? Or are you going to redirect it somewhere that actually builds something for your future? Because that decision, made in a completely ordinary, unremarkable moment, is often the difference between people who stay financially stuck their whole lives and people who slowly, steadily build real wealth over time. Think about it this way. Most people are looking for some big dramatic financial breakthrough, some huge raise, some lucky investment, some windfall that changes everything overnight. But real wealth usually isn't built that way for most people. It's built in these quiet, unremarkable moments, like the day a car payment disappears and what you choose to do with that freed up money in the months that follow. Nobody's watching that moment. There's no celebration for it. But it's one of the most powerful financial decisions you'll make, precisely because it doesn't feel powerful in the moment at all. So here's what I want you to actually do. If you have paid off your car recently, or you're about to, sit down and make an actual decision about where that money goes before it has the chance to just quietly disappear into your everyday spending. Set up an automatic transfer the same day your loan payment used to come out, so the money moves before you even see it in your checking account. Put it toward investments, an emergency fund if you don't already have one, or paying down other higher interest debt if that applies to you. The exact destination matters less than making sure you actually make a conscious choice about it, instead of letting your lifestyle quietly absorb it without you noticing. Because here's the truth. Paying off your car loan doesn't automatically change your financial life. What changes your financial life is the decision you make the very next day with the money that loan used to take from you every single month. That's the real turning point. Not the last payment itself, but everything that happens right after it.